Hey traders! In this video, we are going to dive into the ultimate strategy using one of the most foundational and powerful concepts in all of trading, which is support and resistance. Whether you are a beginner or an advanced trader, mastering these key levels is absolutely essential because they can show you exactly where the price is most likely to reverse and give you highly profitable entries. So without further ado, let's dive right into it. First, we need to understand what exactly support and resistance levels are and how they form on a chart. In simple terms, these are key levels that formed horizontally where the price has bounced off in the past and could possibly bounce again in the future. The rule for drawing them is that a level requires prior rejections to form, meaning price needs to retest a level with a minimum of 2 times. For example, if you see that the price goes down, then goes up, and comes back down again, hitting that same level and bouncing upwards, because it retested the level twice, we can confidently call it a support level. On the flip side, if the level is above the price and price bounces downwards multiple times, it is called a resistance level, where you can potentially take a sell position if the price approaches it again. However, a very important rule that most beginners miss is that you need to treat support and resistance as a general area or zone and not as solid lines. Price rarely touches a line perfectly before reversing, so marking them as thick zones will save you from missing out on good trades. Now, the basic way to trade this is to just buy at support and sell at resistance. But to create the ultimate strategy, we need to look at what happens when these levels are finally broken. A very common and highly effective setup occurs when a previously respected level is broken. When price breaks below a support level and then later approaches that exact same area from the bottom, it now becomes an area of resistance. The old support turns into new resistance. This gives us an incredible opportunity to take a short position when price retests that broken level. The exact same logic applies when a resistance level breaks to the upside. It often becomes a newly formed support level where you can look for high-quality buy entries. To make things even better, aside from horizontal levels, you can also apply the concept of dynamic support and resistance. Similar to regular support and resistance, dynamic levels also act as key areas for reversals, but instead of using static horizontal lines, they use indicators like moving averages to act as our key level. When price is trending, it will often pull back to a moving average, which acts as a dynamic support or resistance, giving you another layer of confirmation. But to really filter out the bad trades and drastically increase your win rate, you must combine your support and resistance levels with other technical factors to create what is called a level of confluence. An area of confluence happens when multiple key levels line up in the exact same zone, making it the strongest type of key level where the chance of a price rejection is much higher. For example, let's say you spotted a resistance level on your chart, but you also noticed that the price has been making lower highs, creating a downwards trend line. If you extend both the resistance zone and the trend line, you will eventually find a specific area where the trend line and the resistance level intersect. When price approaches this specific confluence level, you do not just blindly enter your trade. Instead, you want to wait for extra confirmation, like a bearish candlestick pattern. Once you see a valid rejection candle forming right at the confluence zone, you can confidently enter a short position. For your risk management, you can place your stop loss safely above the resistance zone and set your take profit target to 2 to 3 times the size of your stop loss. So to summarize, support and resistance are essential tools to find market turning points, but they become the ultimate strategy when you treat them as zones, trade the broken levels, use dynamic levels, and wait for areas of confluence. Now, if you found this video helpful and want to learn more simple and easy to understand trading strategies like this, be sure to hit the like button and subscribe to the channel. It only takes 2 clicks, but it means so much to me. Thank you so much for watching, and I will see you in the next one.